We are live. The ticker is ticking. We have East Main Street Insurance here, Ryan Dunstan, and we have Chris Kamara with Cobalt Insurance Company, Insurance Services, Cobalt Insurance Services, Insurance Agency, right?
Yeah, Cobalt Insurance Agency.
I was gonna make you a company just then. I mean, the way that you're putting out content and the way that you're operating, you basically are a company. I don't see why not.
I think we're doing the same thing.
We are House Calls, the home insurance podcast. Two agents wanting to get in front of you to answer your questions. We know that you have them. We want to be able to answer them and make sure that you're up to date and aware of the inner workings of the California insurance market at the time for homeowners. It's always every week there's something new, something fresh, something happening.
And I can confirm we just went live. I was just checking our systems. Everything's working the way it should.
Okay.
So we are ready to rock. We're an hour late, and thanks for posting that, Ryan. Scheduling, we had some scheduling issues. It looks like we already have a viewer. And I guess we could start. I mean, we've got a lot to go over today.
Yeah.
So
and
I'm going to move the slides. You want to talk through?
Yeah. Since you mentioned we have a viewer, we are here for you. If you have a question, a comment, concern, please post it in the chat. We'll make sure that we answer it. And then if you don't want us to address you, we could always address you at another time or address your question. This is kind of the information age, and a lot of people are asking what's happening and what's going on. So kind of just want to get into it and make sure that you're aware of some changes that are on the horizon for homeowners insurance. Obviously, the highest topic right now is California Fair Plan. Everyone wants to know what's going on, what's it covering, what's it not covering, where's my discounts, because my prices are incredibly high. So we're here for you. What was the slide you worked up? I remember you going through them all, but what was the first slide?
We've got a lot going on. So let's see. We'll start with the good news, right? So California Fair Plan discounts. Sorry, I'm just confirming on this side. Looks like everything's working.
Yeah.
So our 4 topics today are the California Fair Plan discounts. And then the other side of that, the bad side, is the California Fair Plan filed for a rate increase. And then with the government being shut down, we're going to go over private flood insurance and then recent political developments in regards to defensible space.
Okay. Those are some pretty hot topics.
Absolutely. So first slide, discounts just got easier. There's going to be partial credits available starting on November 15th. And we as agents get to see it in the system. If we're quoting for properties after November 15th, we get a different screen in the California Fair Plan website to account for these discounts. So instead of all or nothing, now you've got some granular discounts.
Do we have something that shows what it used to look like and maybe what it's going to look like? Is that coming up?
No, I'm sorry, I didn't take that screenshot, but I can say that for all of our agency's clients, we've already sent out a message to them and gotten a lot of response from people that want to explore getting these discounts. So
yeah,
pretty good response yesterday.
And then I guess, hitting on that tiered system, what it used to be is that you'd have to meet, like you say, all or nothing. There was 5 items per tier. You had to meet all of those items in order to qualify for the discount. And now it's changing. So
yep, absolutely. And I think we'll go over that, but it doesn't say it, but we'll point it out when we get to that slide.
Yeah. I remember us going over it, definitely.
Cool. So this is a 1-pager from the California Fair Plan in regards to the discounts and how to qualify and what each discount means or is about. And to my knowledge, and correct me if I'm wrong, Ryan, but this is the extent of description that we have, right? There's no more granular explanation for these discounts.
Correct. Yeah.
Okay. At least I wasn't able to find one. Maybe you were. That's why I asked. And you can see it on the bottom here. Discounts are applicable as of November 15th, subject to change. Going to the next slide, and this is what you were talking about. It was all or nothing. So there's 3 different blocks. You either qualified for this discount or you didn't. Now we can get it at a granular level, and you can get individual discounts. and I know you're talking on social media, and I didn't get to discuss this with you, Ryan, but you were looking at 1 to 2% discount on the wildfire premium per each, I don't know, item.
Yeah, per item. Because someone I think had asked earlier, what is it? Is it 5% per thing? And it's really not. It's really just taking your discounts that you could have gotten before, and now it's breaking it down into either each one of those granular items. So I guess one of the other nice things that I'm now just thinking about is, before you would have to kind of do a little bit of research and ask if you were a part of the Firewise, or making sure that you were letting your agent know if you were in a Firewise community. So now you can actually put it on this form, and that way they're being notified that you're addressing the Firewise community aspect.
Sure. And I have seen that when quoting in the California Fair Plan. I have seen that even if I said no to a discount because I wasn't aware there was one, and it's in their database, that it actually does apply the discount.
Right.
And I've had the converse as well. I've had a client tell me there's a discount, and I say there is. I put the name in, but it doesn't give it until we submit the application and they review that information.
Yeah.
Right. So it's either way, but at least it's starting to become addressed.
And it's not gonna take the Firewise discounts that are in progress, because if you go onto the NFPA site, it'll show Firewise discounts that are an active and approved community, but sometimes there's a community that hasn't gotten that status yet. So it's, even if you're in that in lieu status, you're not able to get it until you're actually approved.
Got it. And then to the next is what we as agency, so we're going to pull back the veil a little bit and show what we're quoting. And this is in the Fair Plans website. And you can see here, they've got this brand new thing. You said today, right? I didn't see this yesterday.
Did not see it yesterday.
So there's two different types of selections to make. And if you pick one, which is what we've been quoting on since 2023, so almost 2 years now, and then there's a new one that accounts for the discounts starting November 15th.
Right.
And then this is the new one. So my made-up guy, James Dolan here, and you can see this all remains the same. I don't know if you can see my mouse, but the first top half, the rating questions, that's all been there for a while. And then now you can see it's more granular here for these discounts. So this is fire risk reduction community, which there are only 25 of. And isn't the window closing for the applications for this year? I think it's closed already.
I think it closed yesterday.
Yeah. So hopefully we'll have more than 25 when the next list gets published. It's published on even years. But this one goes over that and the Firewise. And then going to the next screen, this is the wildfire hardening structure discount. So all those that were in that questionnaire, now we can check the boxes to apply those discounts as we're submitting an application.
Yeah.
And then the next one.
Go ahead. I just quickly went into the Board of Forestry to see. So that new list will be active July 1st of 2026. So that's whenever you'll be able to see who the new communities are, and that you included in it. But I think one of the big things that one of our colleagues had kind of brought up to attention is the County of El Dorado being on that list. And they actually got approved right under the radar 2 years ago. So it was good of them to get that designation, so that way they could apply for that Board of Forestry.
Yeah, a lot of people got the designation, but the carriers weren't accounting for it, and now it's finally working into it. So the Fair Plan is part of other carriers that are working those discounts in, right? So if it didn't apply before, you're in now, and we can start applying discounts, especially for the California Fair Plan. So we got the community, we've got the structure, and then the areas or immediate surroundings for that structure. So, and I didn't answer any of these questions. I was just taking screenshots, but you can see it's all granular.
Yeah. Which it's going to be huge. I think it's going to be so nice there's a lot of clients that I've had over the past couple of years, and, they don't want to make that investment to.
No, it's expensive. It can be definitely expensive. Yeah.
I think another thing, I mean, as far as a crystal ball goes, I still think meeting a lot of these is going to help you to be eligible for carriers as soon as they start to come back to market. So
Yeah, I get asked that a lot. Does this mean that carriers are going to re-enter the market? If I meet all these criteria, they're going to want me. That is
right.
the thought process. We don't have a crystal ball, but right now we know that the discounts will apply if qualified for. And in theory, that makes the home or the risk more acceptable, and carriers are going to want to write it.
Yeah.
That's just, again, theory.
Yeah.
And then I've been asked, go ahead.
I was gonna say I'm always part-time Nostradamus, you know. I gotta have some sort of theory of what our industry is and kind of see how things have shaped up over the past 10 years or so. So
Yeah. So we've been asked some more in-depth questions by clients, and the answer is I don't know. And I will tell them that because I don't know more than the information being provided. So we've got a form to fill out currently. That's this form. And our clients are filling it out to the best of their ability, signing it, sending it to me. We're putting it on our list to send to the California Fair Plan so that we can get it applied when that happens. But right now, that's all we know. There could be a requirement now with new applications that maybe just like how we have to submit a photo, right, to an application, maybe we're going to have to submit photos that qualify these discounts. And again, I'm spitballing. This is not something officially sent out. This is not something we've been told. I'm just seeing where it could logically go, right? Does that make sense?
Yeah, and people should know that you can apply for this as always midterm. You can do it with the discounts now. So
people. That's what we're doing for our clients. Absolutely.
That's why people think that you have to wait until renewal time, and that's absolutely not the case. You know, you can apply for these at any time. So it's probably going to be a fun month of November because this is going to be launching, and people are going to want to know information about what's happening. So you know, we'll definitely be, I'm sure, be putting on a podcast just based on what you're going to have to do. Just to do it.
When we know more. Absolutely. Yeah. All right. So now we're on to the bad stuff, the new change. So the California Fair Plan, Ryan is a hawk when it comes to rate filings. And he found this a while back, and I know it's been in the news, but the California Fair Plan has filed for a rate increase. And we're not right now trying to shock or awe anybody. We're just giving information so that everyone can make their own educated decisions. It's very, very clear on this screen. It's filed and not final. So I get it a lot when people tell me, oh, the carrier filed for X and got a 26% increase. It doesn't affect, it's a blended. So it's not everybody across the board gets that same increase.
Right.
It's going to be affected in this case by zip code. So we built the tool right here, and then I'm going to pin this pin.
Well, and that, you know, while you're bringing that up, I mean, that's another thing that's kind of huge is, you know, the last increase that was applied for 2 years ago, the original increase was for over 50%, and that's not what was actually approved for. So just be aware that, you know, whenever they file for these things, that the Department of Insurance and the Fair Plan has to go through some pretty rigorous weights and measures, and making sure that what rate that they're going to imply is true, accurate, and it's I hate to say affordable, but that it's appeasable. Like they have substantial evidence of making this increase.
Those rates being necessary, right?
Yeah.
Cool. And then moving down here, let me get back to this screen here. So this is where Ryan looked it up. It's in, say this for me, Ryan. I always screw it up. Surf.
Surf. And
so this was the filing. It was right at the end of September, right? That's when this filing happened. Yeah, there it is, 9/29. So we're talking not even a little over 2 weeks right now.
2 weeks, yeah.
It was filed.
About that.
So breaking news in terms of insurance.
You know, honestly, I feel like this rate increase, like it was murmured, and I think because of how much of a microscope that Fair Plan is under, that more people are aware of this proposed rate increase. And it's mainly because of how everybody is looking at Fair Plan and how much scrutiny it's under right now. So anything that does happen, word is getting around a whole lot quicker than it used to.
Oh, yeah. And then this is public. Anyone can go to the National Association of Insurance Commissioners and look this information up. This is not something that agents only can access. Anyone can look this up. And then this is the second screenshot. I couldn't fit it on one, but the Exhibit 20 customer dislocation is where it provides the information by zip code of the proposed rate increases. And that on that tool we have, I'm going to show it here. So we've got that tool here on the website. Anyone can go to this and then they can enter their zip code. In this case, I entered Grass Valley 95945, and you can see the projected or proposed rate impact is 22.7% increases for that zip code.
Yeah.
And then I'm going to flip real quick. Give me just 1 second here. And this is the actual website, and the link is still here on the bottom of the screen. But what's another zip code? What's Auburn? 95603?
Yep.
So Auburn's proposed rate impact is 35.5%. And it gives a little bit more information. It gives a zip code, how many policies are in that zip code, what's the total premium and proposed change, and then the dollar amount. So I'm unclear. Maybe you can explain this. So the average policy, if the rate were approved, is going to go up by $1,300. Is that right?
Correct.
And then the maximum rate would be
all
$6,000.
All of the policies in force, if they were to have that rate increase, that's the average of how much it would go up.
So $1,300 if approved. Again, we're talking future. This hasn't been approved. Cool. I'll jump off of that back to our presentation. Nope, not that one. That one. And then we can talk about flood insurance. You want to go over this one?
I don't. Do you?
Okay, so this one's pretty simple. The government shut down. With the government being shut down, the National Flood Insurance Program, the federal program, is impacted. They cannot write new policies, and anyone that's required. So I think depending on lender, but it's typically anyone outside of flood zone X. I don't think X500 and X99 are required, but some of the others are. And if they are required to have flood insurance and you're buying a home and you can't get it through NFIP, then they're not able to close your home. You're not able to purchase the home. Yeah. We have, and many agents have, not just us, but there are private flood carriers that are absolutely accepted, and they're very competitive. We write with Neptune and Wright Flood, and they're a great alternative to NFIP. And again, most of the time, they're more affordable. Not every time, but most of the time. And we're still able to write flood insurance. That's the bottom line, is if you're somehow affected buying a house and you need flood insurance, there are options.
Yeah. I don't really ever deal with flood. So I mean, it's almost as bad as like me writing earthquake. I think I have one policy. So it's pretty rare for me to even quote and or even talk about flood insurance.
We quote it every once in a while. It definitely affects us because we're writing in the Thomas area, Pocket area, those areas, floodplains, right? So,
and you have to be flood certified, right, in order to sell them?
For an agent to sell, they have to take an education course. Yeah.
Yeah.
Cool. Moving to the next.
Oh man. See what happens whenever we wait on our podcast. I'm already starting to get tired. An old man.
So political developments, grants for defensible space. This is the California Safe Homes Act, AB 888. I don't believe it's passed yet. It's just in process, right?
Yep.
Let me look that up real quick.
But the Department of Insurance has been putting a huge amount of energy into putting Zone 0 into effect. And I think that's, it aligns with the Commissioner's Sustainable Insurance Strategy and the Safe Homes Act, I believe, too. So they're gonna keep making this.
No, the California governor has signed it. It's law now. So this is law now. According to the California Department of Insurance. Here, I'll pull this over to this.
Approved and enacted effective 10/10.
Yeah. So this is the California Department of Insurance's Facebook page, and it has been signed into law effective 10/10, so 6 days ago. So AB 888 is now law. And it's gonna. Wow, I didn't realize I had the slide so updated. Financial assistance to cover part or all of the costs for fire-safe roofs, grants for Zone 0 defensible space, the first 5 feet around the home. The biggest question I get, and I know you and I have talked about this in prior podcasts, is about fencing. And I believe that's going to apply as well to the Zone 0. So wood fences, if it's within 5 feet of the home, then it's not going to qualify the home for that Zone 0. Am I right on that, or do you see otherwise?
I think it's also still carrier dependent because it is so new that they haven't actually put a lot of things into action. But
Got it.
yeah, I do see the fences. It's going to have to probably be metal, where we've seen that even with the IBHS videos. You have that metal, essentially the door or whatever the access point is, making that a metal gate that goes up against the home.
Got it.
But
Cool.
It's also going to be changing probably building codes. Geez, a lot of stuff. There's probably a lot of things that are going to have to now be starting to change.
Yep. All right. So moving on to the next slide, final takeaways. So pretty straightforward stuff. Mitigation pays. And with this new AB 888 in law, you can earn discounts. Sorry, this is fair plan discounts.
Yeah.
So you got granular discounts for the fair plan. The proposed filing is a proposed filing, not an actual confirmed rate. So don't panic. It's not final. It's definitely something to keep in mind, though, right? So like if you're looking to purchase a home, or if your client's looking to purchase a home and it's got to be the fair plan, this may be something to discuss with the seller about, you know, what the rates are going to be and how much more it's going to cost to insure the home. And maybe that's a negotiating point. I'm not a realtor. I'm just thinking from myself as a consumer, that'd be something I'd be bringing up in a conversation.
And I brought it up today in a conversation to someone who's a landlord, you know, and they've got a couple different tenanted properties. And, you know, you're also limited how much you can pass on that rate to someone else. So, you know, getting ahead of these proposed changes is going to be detrimental to how you probably do business with the tenants.
And then flood coverage. Again, we're still writing flood. It's still available and not an issue and competitive. And then for Ryan and I both, our commitment is to empower you. We want to provide information and help with making decisions and be able to answer any questions you may have.
That's us on a daily.
Every day.
But you know, once a week, here we are
on
our, you know, on our cast. And
what we'll tell people is we have these conversations without a recording, without a podcast, on a regular basis. And we're not the only ones. Other agents are doing the same.
Oh, definitely.
And if we're not doing that, we're chatting online, or one way or another, information is being shared. I know you had a couple pieces to go over, Ryan. I'm looking it over. Did we miss anything that you wanted to talk about?
No, I know that I want to talk about obviously the fire hardening, the open market, and the check-in. Did we see any other rates that were being increased as well with that filing? I know that one of our carrier partners had sent us something.
I didn't see anything that jumped out at me. It was a shorter list. So no, I don't have anything to add. I would have put that on the slide too. So
about carriers, I know that I keep hearing about a certain carrier with the letter C being able to come back into the market.
You have? You know more than me.
Costco, you're the one.
Oh, they filed for a rate increase, I believe, of like 36%.
Yeah.
But they're not writing in high fire areas. So they're definitely, if you're in the concrete jungle, not near trees and stuff,
yeah,
they may be an option. But I thought most of what we're discussing today is really the foothills, the higher fire areas, you know, up 80, up 50. That's where a lot of the premium really has been huge, right? You know,
Uh-huh.
we're still writing things under $2,000 in the concrete jungle all over Sacramento. Sometimes for new construction, almost under $1,000. But it all depends.
So I did see a few questions that maybe I could just ask you since you're the expert, and we'll see if you can answer them real quick.
All right, go for it.
So will the Fair Plan rate hike still happen if the discounts roll out?
Yes.
Oh man.
The discounts are happening. Absolutely. November 15th, the filed rate increase still has to go through a long process. That's not going to be, I wouldn't even say for the next 2 quarters, if not 4 quarters before something like that gets rolled out. Would you say it's that kind of a timeline for rate approvals?
So in that filing, it says that it's supposed to come out April 1st.
So 2 quarters from now.
2 quarters. That's if everything goes smooth, there's no pushback, which I will reiterate again. The last Fair Plan took 2 years, but the insurance commissioner has said that they want to make carriers have a streamlined and quicker process for getting the rates approved and getting them out. So we'll just see what happens. But I'm going to say tentatively now, April 1st is definitely on the horizon.
Yeah, and I'm going to guess with my fake crystal ball that the rates are not going to go that high. They're going to get an increase, but I doubt it's going to be as high as what we're seeing in the filing.
Yeah.
What else you got?
Does the DIC policy get the same discounts?
It's carrier dependent, right? So I don't know how fast these carriers are going to roll that out. I do know when quoting DICs, I get asked those questions. Even regular homeowner policies, I get asked these questions. Each carrier to a certain degree is accounting for it.
Right.
And what I see right now, if I'm writing a typical homeowner policy and I get these questions, the discount is so infinitesimally small. It's so tiny that it's not a factor.
Yeah.
So they're not really accounting for it. They're doing it because they legally have to, but they're not applying any large amount of discounts from any carrier I'm seeing. And I'm not seeing all the carriers, but I'm just speaking to the carriers that I do write. The Fair Plan is pretty significant. I mean, you can get up to, I don't know, if you think there's 5 and 3, you could get, something, and I'm making this up, I don't have it in front of me, but like 15% off. That's a significant amount.
15 and 20% usually.
Yeah, that's a significant amount, especially if you had done some mitigation and couldn't qualify because of the all-in, but now you can get the incremental pieces. That still adds up, right?
Correct.
What else you
got? What happens if I fail inspection after getting the discounts?
Great question. I have no clue. Do you know, Ryan? Like, we don't know enough to know what's going to happen, right?
Yeah. So they just go in and they revert off the discounts that you'd gotten. So after the inspection comes through, the Fair Plan will go back and they will say you did not meet the criteria you said you did, and then they will reapply.
Take off the discounts.
Mm-hmm.
Okay. See, we haven't even gotten to that part yet. I haven't applied those discounts. So.
Well, that's what it was for the current situation with the current discounts. A lot of people are saying, "Oh, well, I never had the inspector come out," which I mean is true. I don't see an inspector being able to go to every single house that is applying for these discounts and then get the information back to Fair Plan. They say that they are. I'm sure maybe they are, but I mean, it's just, I don't know. It's just crazy to think.
Yeah.
It's like Santa Claus traveling across the whole world in one night, Like maybe they got Santa Claus on payroll, because it's the slow season.
I don't know. But yeah, that's going to have some bumps in it, right? Because there's going to be thousands and thousands of people applying for discounts. I'm very curious to see how that's going to be addressed.
Yeah, me too.
Got anything else?
What if my property isn't Firewise? Can I still qualify for anything?
Yes, dependent on the individual discounts.
Yeah.
I'm looking through some other stuff we had queued up, but I don't see anything relevant.
If anybody has a question, we're here. This is your time to ask it. There's chat. There's messaging on our
I see that we have a few viewers today.
Facebook pages. Send us something so that way we can help not only you but maybe your neighbor. Because everyone's always asking, oh, where's your insurance? Where can I go? I'm getting dropped. And it's still happening. I think still talking to people with Lemonade. Lemonade's dropping people, next year. So there's still a lot of carriers that are out there that are going to be non-renewing them. Maybe they're shifting their own internal book around and are going to be non-renewing them. So it's definitely a fluid market, and I think it's going to be this way for several years.
I agree. I don't see a killer shift where all of a sudden we're back in 3 or 4 year rates from now. So 2022, 2021 rates. I don't see that happening. Cool. We got a couple of viewers, no comments, and we hit that half hour mark. I think that's what we're planning now for these. Instead of being an hour long, we're doing half hours, right?
Yeah, half hours are good. I think we're still able to get our content out pretty much and give people still an option to hop in. I do like the later time still. I know that we said
I actually do. Yeah. I think it's great. If we did 3 o'clock or 4 o'clock on a regular basis versus 2, I think that's going to help us as far as workflow. So we may publish that and say we're changing to a different time. Cool. I don't see anything else. I'm going to end the stream now.